Good morning, ladies and gentlemen. I'm Margaret, the moderator for this conference. Welcome to the conference call of RITES Limited, hosted by Concept Investor Relations, to discuss its Q3 and 9 months FY22 results. We have with us today Shri Rahul Mittal, Chairman and Managing Director, Shri Gopi Suresh Kumar Vadarajan, Director Projects, Shri Anil Vij, Director Technical, and Shri Vivu Prasad Nayak, Director Finance. At this moment, all participants are in listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your telephone keypad. Please note that this conference is being recorded, and in the interest of time and fairness to all participants, you are requested to restrict yourself to 1 question per participant. Time permitting, you may come back in the question queue. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Shri Rahul Mittal, Chairman and Managing Director. Thank you, and over to you, sir.
Thank you. Good morning, everybody. Let me begin with the safe harbor statement. The presentation which we have uploaded on our website yesterday and all discussions during the call today may have some forward-looking statements. These statements are considering the environment we see as of today and obviously carry a risk in terms of uncertainty, because of which the actual results could be different. And we do not undertake to update those statements periodically. So having said that, you've seen our results on the uploaded on the website and our social media account. And the results are encouraging. While the trend of growth has continued, there is it's in line with the predictions that and the outlook that we gave at the end of Q2, that we are targeting to reach the baseline levels of pre-COVID-19-20. And in that line, all our parameters are progressing in that direction, and we are quite confident that with this trend, the Q4 and this year as a complete year, we would be able to touch the pre-COVID levels of 1920. With these opening comments, I hand over to the participants for their questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We would also request participants to limit a question to 1 at a time. Should you have a follow-up question, please rejoin the queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, you may press star and 1 at this time. The first question is from the line of Shreyans Mehta, an individual investor. Please go ahead.
Yeah, hi sir. Sir, one request from my end, could you please have at least 2 questions per participant? Generally, we have a follow-up question, so it's better, we clarify it at that point in time, rather than waiting in the queue. So that's a suggestion from my side. Now, coming to the question, sir, if you see our export order book, we are roughly at around 650 odd crores, which is pending. And given that, we'll be executing it in Q4 and next year probably for 1Q. So, is it fair to assume that, we'll be, fulfilling this orders and this entire order book will be over by, say, FY23? And if so, how do you foresee the FY23 revenue and EBITDA margins playing out?
So very valid point regarding the exports. We have a balance order book of about 675 crores in exports. And as you've seen, we've touched a total cumulative of 700 crores in 9 months. We foresee that in the quarter 4, we should be realizing another about 250 to 75 odd crores, which leaves us with a balance of about 400 crores for FY22-23. Now, with the trend of the shipments going on, I foresee that this should last till somewhere about middle of 22-23. Having said that, the exports, as you know, are a long lead line of business, and we are aggressively now with the various international countries all over opening up. We are in touch with a number of countries and trying to fructify into a finite order. But yes, it has a lead time even after getting the order. So I foresee that that the fresh orders, as they mature in the coming months, the revenue realization would start coming in by maybe end of 22-23. However, that concern of yours regarding the impact on the top line and the margins will be more than taken care of our current order book, which is around about 5,100 crores, as you've seen. And out of that, about 2,200 crores is on consultancy and 2,000 is on turnkey, which are progressing very well. And we are more than confident that the gap, if any, in the few months for the export segment will be more than taken care of by these two segments.
So just to clarify, sir, even assuming that, we get some orders from exports, and if those come under execution by, say, 4Q next year, but, we might see some, growth in execution, but how will the operating margins play out? Because turnkey will be, a comparatively lower margin business as what exports is.
So as I said, you're right in saying that turnkey has lesser margins than export, but consultancy wing has got definitely a much higher margins than export. So as I said, since we have a strong order book of about 2,200 crores as of now itself, and we are continuously getting orders. In the last quarter itself, we got fresh orders total of 300 crores. So we are more than confident that we will be able to maintain both the top line and bottom line, at least at the FY21-22 level, and aim for higher as the quarters progress.
Sure. I have a few more questions. I'll be waiting in the queue. Thank you and all the best.
Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Lokesh Manik from Valum Capital. Please go ahead.
Yes, good morning, sir, and good morning to the team. Am I audible?
Yes, good morning. Yes, very clear. Thank you.
Yes, sir. So the first question was on the consultancy order book. So if I can, pardon me if I'm wrong. This looks like the first quarter where we've not been able to add orders in the consultancy segment. Given that last quarter the outstanding order book was close to 2,500 crores, and today we are at 2,200 crores. So this was just a concern at my end. If you can address that, how do we see growth coming here? That was one. And second, sir, in the last two calls you had also given your vision in terms of driving the organization more from an IT perspective. So any progress and any update on that front, if you can share, it would be great, sir.
So the first part of your question regarding the consultancy, while you can see, as I said, a breakup of about 2,200 crores in consultancy, we have got fresh orders of a total of 300 crores in the last quarter, and a large portion of that is consultancy also. So orders have been coming in, and a number of them are in the pipeline, which will mature in the coming Q4 as well as the next Q1. The second portion regarding the IT, as I mentioned after the last quarter, we have been aggressively working on making IT as a major revenue earning vertical of ours, rather than basically a service vertical and a small amount of revenue. So a lot of are being explored, including partnerships with various prospective the people who can complement our domain strength, so that we can aggressively take part both in consultancy as well as execution projects of IT, both in domestic market as well as the outside market. So you will be definitely seeing some progress in the coming quarters in the revenue realization from our IT vertical.
Okay. So just for clarification, this opens up a new stream of, this opens up a new market for us, or it complements the existing markets and helps us gain more market share?
IT can be seen as complementing my existing verticals per se, because we have a very strong urban engineering and sustainability vertical, and we're doing city planning and smart city planning. So as you can understand, IT is the underlying current and underlying thread which binds all my smart city planning, my logistic planning, port planning. So IT would be supplementing all this, as well as maybe some independent IT consultancy works also.
Understood.
Thank you.
Yeah.
Thank you.
Thank you so much.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. A couple of questions. One, in terms of turnkey, what would be the execution timeline for this 2,100 crore order book?
So the turnkey projects normally take about, on an average, about 3 years to about 4 years, because they involve issues like land acquisition, contracting, and things like that. As I mentioned, if you remember in my last Q2 call, the second phase of most of the turnkey projects have now started post the second wave of COVID, and now the Q3 they are progressing very well as the restrictions are getting relaxed, and by Q4 and Q1 of next FY, they will start incurring more and more revenue. So these, as I see happening, the existing order itself of about 2 to 3 years, and in any case, fresh orders would keep getting added.
Okay. And in terms of margins in the turnkey, earlier we were guiding at around 3 to 4% margin, but this quarter it was hardly anything we have earned there. So any comment on there? Is it because of the, input price increase, or why there was no profit?
No. It is not because of any cost increase. See, turnkey is a low margin area. It is normally it's in the range of about 2 to 5%. But as I said, because the second phase of most of our turnkey projects have started getting executed in the last few months, the revenue realization of this will start coming in the coming months. This I indicated even in the Q2, that by end of Q4 and early Q1, this will start coming in. However, as you see, because the costs already start getting incurred, so you would see a temporary dip in the margin for Q3 per se, but it would even out in the coming quarters.
Thank you. I would request Mr. Doshi to rejoin the queue. The next question is from the line of Arshad Syed from Reliance Securities. Please go ahead.
Yeah, hi sir. Thanks for taking my question. So my first question is again on prospect opportunity. What would you like to see next couple of years, and how RITES will benefit from them? If you can guide me broadly on that.
So, interesting question, and this is what we would like to share with you, that you see, we are in a big way diversifying into a number of areas which will consolidate our existing lines of business. So we in fact, from the 1st January of this year, we've transformed to green. We're transforming to green in all our activities, whether it is the DPRs or the consultancy. So we started a consolidated and enhanced a new vertical called urban engineering and sustainability. So this is a very interesting area. We have already got lots of projects here. We've entered into partnerships with some known entities, where we are targeting the new areas of renewables, there's this carbon reduction, and all the new areas which has come out of the new policy, especially after the COP26. So this is another big area where we foresee a lot of growth in the coming years. Another big area is the metro. So metros we have already been doing both domestic, about 11, 12 states, and now internationally also we did recently the Mauritius metro. We are going ahead with the phase 2 of that. We recently got the order last month for the Bahrain Metro consultancy. And along with partnerships, we are aggressively bidding for both domestic and international metro projects. So this is again another area where I see a lot of growth for us in the coming years. So these new age areas, and I mentioned IT sometime back, smart city planning, I foresee a lot of growth to complement our existing lines of business.
Yeah. Thanks. Next question is, if you remember last week, budget has outlined major capex on capex.
I request you to come back in the queue for your second question. Thank you.
Sure, sir. Sure.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, hi. Good morning, sir, and thanks for giving me the opportunity. So just wanted first for a clarification. You mentioned that you would be reaching a pre-COVID level in FY22 of FY20 numbers. If I am making that as my base, then it is suggesting that the Q4 number may see a revenue decline. Now that you have also highlighted the export revenue to be around 252 to 75 crores. So either consultancy or turnkey construction business may see a decline. Is that something a clear understanding? Just wanted a clarification on that.
No, I wouldn't put it that way. As you see, our baseline target is to reach the pre-COVID levels, and as of 9 months ending, if you compare all the parameters, whether it is the operating revenue, we are in the range of 1800 crores, whether it's the core EBITDA, we are in the range of 450 crores, whether it's the core EBITDA margins, we are about 24.6%. So the point is that we are on track to our target of reaching the 19-20 pre-COVID levels. The actual revenue mix or the individual contributors in Q4 may vary depending on the state of each of the segment projects. But as an overall, we are targeting to reach both the top and bottom lines of the 19-20 levels at least.
Okay, fair enough, sir. The second question is on the...
Sorry to interrupt you, Mr. Kapadia. I would request you to rejoin the queue for the second question. Request participants to please limit your question to one at a time, as we have several others waiting for their turn as well. Thank you. The next question is from the line of Uma Usha from Sharad Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, if you could give the total debtors outstanding as of December 21 and the Sri Lanka exposure out of the same, that would be great.
Yes, I have Mr. Nayak, my Director of Finance. He'll give the details of the debtors. Do you have it right away? Okay, just a minute. I'll just give you the figure.
Sure.
And the Sri Lanka project is progressing well. Both the Mozambique and Sri Lanka export project is progressing well. As I said, about 675 crores is the total export balance, both combined, and I foresee it to be coming up till the Q2 of next year.
But sir, the fiscal situation in Sri Lanka is quite bad right now. So
we are very well in track. So Mr. Nayak will give you the debtors figure.
The trade receivable as of 31st December stands at 607 crores, and most of the receivables from Sri Lanka we have already realized, and part of the export realization from Mozambique also we have realized.
Okay, great. Perfect. Thank you so much.
Thank you. The next question is from the line of Chintan Sheth from Samiksha Capital. Go ahead.
Thank you for the opportunity. I joined late on the call. So if you can, hello.
Yeah, sure. I can hear you.
Yeah, sorry. So if you can, highlight the pipeline on orders, because we recognized around 900 crore of orders this quarter. So how should we look at order pipeline going ahead, and any guidance on the order inflows part, if you can share. And second is on the consultancy, if I may, the run rate is still very slow. If you look at sequential growth, it's flat in the consultancy revenue side. If you can guide on that part, why we are taking a little bit longer time to recover in the consultancy. That's all. Thank you.
So the orders we got in the current quarters are 300 crores, and which makes it a total cumulative of 1630 crore orders that we've got in this FY, as against 1841 crores which we got in the entire financial year last year. So it shows that we are well on track. We have within 9 months we've got an orders comparable to the range of the entire year last year. So we are well on track. A number of areas, as I said, including the new diversified areas which we are aggressively pursuing, are well on track. And for the existing order book, 5100 crores, 2200 is in consultancy, 2000 odd is round about in turnkey, and about 675 is in Expotec. So this is quite a solid order book, and as I said, this will only grow both in terms of the mix as well as in the coming quarters. And your concern regarding consultancy, I don't think it is supported by numbers, because the consultancy has been growing and has been growing well. The margins have been also comparable, in fact, to the 1920 levels. So our core consultancy margins, which were in the range of about 43% last in 1920, they are in the same range. So the margins of consultancy and the progress has been doing quite well.
Sure, I'll join back in queue. Thank you. Thank you for this. Yes, thanks.
Thank you. The next question is from the line of Jainam Shah from Equirus Securities. Please go ahead.
Good morning, sir. Thank you for the opportunity. So firstly, I wanted to just get a clarification about this one-time expense of this inventory provisioning. So I guess it will be related to the export segment results, right? Because it is part of inventory. It's 15 crore expense.
Yes. So this is an unfortunate incident. One of our locomotives, which we were exporting to Mozambique, got damaged at the port. So we've made provision as a good accounting practice for the entire cost. We've started the insurance claim proceedings, and as this insurance claim matures, we will hopefully get some kind of set off in that. So that's the.
Okay. So basically, if you see the consultancy margin, it is at around 39%, whereas historically it is ranging between 45 to 50%. This is the only quarter where this has fallen below the 40%. Even during last quarter, it was at 43%, and before that it was ranging between 45 to 50%. So any specific reason to that, like we are just like turnkey, the revenue will be recognized going forward, or is it because of cost optimization? So what will be your guidance for the upcoming years? Will it be ranging below 40%, or it will be back to 45 to 50%?
No, I think as I clarified that the 9-month ending consultancy margin as of this year is 42.3%, which is comparable to the 43% of 1920 level. So I think it's safe to assume that this is the level which we've been operating at. This is a level which we will normally come to operate on in the coming quarters.
Okay, sir. And okay.
Thank you.
Thank you. The next question is from the line of Kunal Sheth from B&K Securities. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Am I audible?
Yeah, good morning. Go ahead.
Yes. Yes, sir. I just needed one clarification. So we mentioned that we are targeting to reach the pre-COVID levels. So that comment for this year was pertaining to the consultancy segment or the overall revenue that we were talking about?
No, overall. So as I mentioned and I clarified with figures, as you see our operating revenue is 1812, which is comparable to the operating revenue 1848 9-month ending 1920. Our core EBITDA is also in the same range, about 450 crores. Our core EBITDA margins are in the same range, 24.6%. So that's what I said. We are on track at the pre-COVID levels of 1920. And as a company as a whole, we are working on not 2021 as any base, and we are working at 1920 as a base to reach at least that level and try and see how far ahead we can go of that.
Sure. Sir, and the related question is pertaining to consultancy. from whatever base we end up at this year, what should be a steady state number one should assume for the next 3-4 years in terms of consultancy, given that we are working with various new avenues, to broaden our end market?
See, consultancy out of the 1,800 crores, which is there in 9 months, the consultancy revenue has been about 700 crores. So that is roughly about 1/3 of the total, and we would continue to be in that range. In fact, we will be, as you correctly said, definitely with the new areas coming up, which we are trying to target, I foresee a growth in the consultancy rather than stagnating at that level. There are a lot of exciting opportunities. The new budget has thrown up a lot of opportunities. 5 lakh crores of the allocation is in areas which is of interest to us, whether it is railways, roadways, Jal Shakti, or the Housing and Urban Affairs Ministry. So the consultancy out of the existing order book of 2,200 crores is in any case going to grow, and whatever gap, if any, of few months which may be there because exports are a long lead revenue realization segment, will be more than taken care of both by the consultancy and the turnkey in the coming FY.
Thank you. I would request Mr. Sheth to rejoin the queue. The next question is from the line of Prashant Gopal from Spark Fund Managers India Private Limited. Please go ahead.
Hi, good morning, team. So there is a reference to the company removing a few orders from the book due to non-starter status. So is that cleanup complete, or will it happen again next quarter? And one more, so the order pickup is not in sync with the Government of India spend on railways. Is there any lead or lag to that? Thank you.
So this is a normal continuous exercise which we keep doing, reviewing our ongoing orders, which maybe are non-starters in terms of not realizing revenue for a substantial period of time for various reasons. It could be across segments. So this is a continuous good accounting exercise practice that we do, and we've done that in this quarter. And obviously, immediately having done this right away in this quarter, I don't foresee it happening in a major way, while it's a continuous exercise, but in a major way not to happen in the coming quarters. However, as far as your second question is concerned, I don't foresee your apprehension in terms of our revenues or profits not in sync with the railway allocation. We are doing a lot of work across the railway segments, both whether it is for Indian Railways as a client, whether it is in turnkey, consultancy, or in exports. We are also doing a lot of railway projects in various steel plants, fields, or in ports. So this is a continuous process. It is that we are going to consolidate in the coming years in our existing lines of business so that we can see more areas of growth besides our conventional lines of revenue.
Thank you. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yeah, so thanks for taking my question. Continuing on this order inflow that you mentioned in the order book, so 300 crore orders that you received, it is from which segment? And second, this order book that, or probably orders that have got cancelled, from which segment it is cancelled?
So 300 crores is across in the same ratio roughly. Our entire, if you have been analyzing our figures, are broadly our turnkey does about 25 to 30%. Our consultancy does about 35 odd percent. Our export does 35 odd percent. But yes, this 300 crores doesn't have any fresh export order, so it is split between consultancy and turnkey. We are getting, in fact, the tilt is towards consultancy. We've got a lot of consultancy orders in this, and this adds up to the 1,630 crores orders which we've got in the coming in the 9 months of this year. What was the second supplementary thing which you asked?
Yeah, so in this the order book we have seen it has gone down. So this order cancellation is from which segment?
No, so this is as I mentioned in the answer to the previous question, this is a continuous exercise covering all covering all the segments. So it is not any particular segment per se. It is a continuous exercise across all segments, but it is primarily tilted towards the turnkey, because you see, by turnkey projects per se in their nature of orders and revenue realization have issues like land acquisition, have issues like contracting, then certain contracts may be run into arbitration. So those kinds of issues come up a little more in turnkey. So as a part of this continuous regular exercise, normally this trend is a review is more in the turnkey area. Consultancy and exports normally don't result into short closing of orders. Turnkey orders also result in short closing because the client would have maybe ordered for X amount of work, and after execution may find that this is enough and they short close the order with a reduced scope of work.
Thank you. Request Mr. President to rejoin the queue. The next question is from the line of Shreyans Mehta from Equirus Securities. Please go ahead.
Thank you for the opportunity once again. So just wanted an update on the capex for 9 months, what we've done, what is for Q4 and what is for FY23, and if possible, if we can have a breakup in terms of how much for REMCL for corporate office and stuff.
So our capex target for this year is about 100 crores. We have done cumulative of 98 crores already. We are primarily an asset-light company. We're a consultancy company by design, by structure. So our capex expenditures are not very large, and RMCL is a separate subsidiary. So in any case, our capex total is in 98 crores, and we have already reached most of the capex targeted for this year. I don't foresee any big capex coming forth in the coming FY also.
Sure, so because earlier, we had some capex lined up for our corporate offices as well as for REMCL. So just wanted to clarify on the same.
As I said, those are very minimal capex. We are not really a capex we are an asset-light company. So I said 100 crores we have more or less reached, and I don't see any big FY22-23 capex targets or capex expenditure, any major capex expenditures.
Okay, nothing towards the solar as well, right?
As I said, I clarified very clearly that I don't see any major capex plan for FY22-23.
Okay. That's it from my side. Thank you.
Thank you. The next question is from the line of Uttam Kumar Srimal from Axis Securities. Please go ahead.
Yes, sir. Good morning, and thanks for the opportunity. Sir, what kind of revenue we are envisaging for REMCL Limited in FY23?
So I must say that RMCL has done extremely well. If you see the figures in the 9 months ending December Q3, we've already touched 70 crores as the revenue and a PAT of 33 crores, which is comparable to nearly the full year of pre-COVID levels 19-20. 19-20, the revenue operations was 78 crores and the PAT was 35 crores. So in 9 months, we are comparable to that. So I see RMCL growing in a healthy way, and with this trend, I foresee surpassing 19-20 levels in a big way, and also in the coming FY 22-23.
Okay, sir. That's all from my side. Thanks.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, hi. Thanks for giving me the opportunity again, sir. Just wanted to check, sir, on the employee front, sir, our strategy has been that we have lowered the number of employees and we are looking at people working more on deputation. But if you look at, last year, as in the first 9 months, the employee cost has risen substantially. So is there a change in strategy over here, or are you getting more work in future, so we are already taking more employees on board? So just wanted to understand on that.
No. So in fact, your figures seem to be slightly. If you see the revenue per employee or the operational profit per employee, we have been we have been on an upward trend. In fact, to give you the actuals, in the 2021 in the 9-month ending, the operational profit per employee was only 9 lakhs. Whereas in this year we've already touched 15.4 lakhs, which is even more than the pre-COVID level of 9 months, which was only 15 lakhs. Even the revenue per employee in the 9-month ending this year is 65 lakhs per employee, which in the pre-COVID levels in 9 months was 63 lakhs per employee. So we are constantly working, and this mix of regular deputations, and this is a constant mix which is based on the need base and the kind of orders and the projects we get. But yes, as an overall picture, we have both in terms of the revenue, operational revenue per employee, as well as the operational profit per employee. We have already gone ahead of the pre-COVID levels also, and we will continue to maintain this trend in the coming quarters and the coming FY.
Thank you. The next question is from the line of Rohan Samant from Multi-Act Equity. Please go ahead.
Yeah, thanks for the opportunity. So just wanted an update on whether the quality assurance would be covered under the October Railway Board circulars regarding opening up of tendering to private competition.
I'm not very sure of how it pans out. Yes, the circular says in general. Whether it pans out in the coming months to apply to QA, time will only tell. As of now, we are more than equipped. We have already got lot of orders in a number of places on competitive basis for our QA wing, and we are more than confident that with our expertise and our experience, and also our competitive edge in the financial portion of our bids, we will take this as more an opportunity rather than as a challenge. So we will be more than confident to, as it pans out, to tackle as it comes.
Thank you. The next question is from the line of Vishal Periwal from IDBI Capital. Please go ahead.
Yes, sir. Thanks for taking the question again. Just continuing with the previous participant, you mentioned the capex in FY23 will be negligible since you are consultancy. So this capex, when you said capex, it includes both your investment and capex, right?
So it is primarily capex, right? And capex also includes if you do some major investment into your subsidiary. That is the per se definition of capex for the holding company. And as of now, the principle of a consultancy company, and you've seen our past capex figures also, they have been in the range of about 80-100 crores only. So that is what I mean by not a very large capex.
Okay, so then solar plant, that proposal that we used to communicate to the investors in previous quarters, 1,000 megawatt, 1,300, then it was a bit of change in also. So there is no major capex that is happening on that part?
So as of now, it is still in work in progress, and we'll see how it pans out, how much it entails capex for us, and by the end of this FY, we would be able to then give you clarity on the capex plan for FY22-23. Having said that, as a general, why I reiterated and again reiterate, as a general guideline, we are not really a very capex intensive company. So these, even if as you see the past trend, this is a very minimal amount of capex figures in the overall capex, expenditures across companies.
No, I think that's a pretty commendable. Reason is we are consultancy and we are not loading up our balance sheet. So that will be taken positively by the investors if we are going in that direction. Thank you so much.
Thank you. The next question is from the line of Uttam Kumar Sri from Axis Securities. Please go ahead.
Yeah, thanks for giving an opportunity once again. Sir, we have a turnkey order book of 2081 crores. So what kind of revenue we are foreseeing in FY23 from turnkey segment itself?
So if you see again, as I mentioned, turnkey contributes roughly about 25 to traditionally, if you see over a sustained period of time and a longer period, say maybe 6 months or a year, because if you see a particular quarter, the maybe as I said in Q3 or Q2, the revenue realization of turnkey was less. But as a whole, the turnkey normally contributes about 25 to 30% of our top line. And with this 2100 crores of the order book, I see that it's a substantial. You can and having given a guidance that we will reach at least our 19-20 levels in 21-22 and grow further in 22-23, it would be in that range of the total top line. Turnkey would contribute to that.
Okay, sir. Okay, that's all from my side. Thank you, sir.
Thank you. The next question is from the line of Jen Shah from Equirus Securities. Please go ahead.
Thanks for the opportunity again. So basically, if we see our export revenue in last 4 to 5 years, so it was ranging between that 200 crore or somewhere. In FY21, we were not able to record major revenue because of this COVID pandemic and this shipment issues. And if we see the upcoming year thing that we'll be executing somewhere around 400 crores from current export order in FY23. And there is no major order on hand in our books, and if you see the past, then there is no major order, major export revenue in our overall revenue per se. And if we take the this consultancy at around 1,000 or 1,100 crore and this turnkey at around 700, 800 or even 1,000 crore rupees. So our revenue from the FY22 level will be in the similar range of for FY23. And if we talk about the margin, that export margin, which is contributing at around 25% as against the increasing share of this turnkey segment, would be hurting our overall EBITDA margin. Is this understanding correct?
So first, let me go step by step. So you asked 2-3 things linked to each other. First is that export, we've done the highest ever in the 9 months. We've touched 700 crores. So this year, with the balance Q4, as I said earlier, another about 250 to 75 odd crores, we would touch the highest in the recent few years. Yes, the balance about 400 odd crores would spill over to the next year. And also, we are aggressively working on a number of fronts on export leads in various countries, as I said, because of the all now international travel and countries opening up. We have been having a lot of interaction. I'm sure that in the coming months, we should be able to get some export orders afresh. But as you correctly said, by their basic design, export segment is a long lead segment. From the time the order matures till the time the revenue realization happens, it is a long lead. So having said that, however, with our 2,200 crores of consultancy in our order book of 5,100 crores, the gap, if any, in the FY22-23 will be more than made up by the consultancy and the 2,100 crores order book of turnkey. The consultancy wing by itself has a much higher margin than the export wing. So whatever gap, if any, in few months, which would be there from revenue realization from the export wing, would be more than taken care of by the revenues and the margins by the consultancy segment. So as an overall in 22-23, we are aiming to target the 21-22 levels of revenues and margins at least, and aim to at least improve as the quarters span by.
Okay, sir. But if we see the overall range of turnkey during this.
Mr. Shah, may I request you to rejoin the queue for follow-up questions? Thank you. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Hello.
Yes, go ahead.
Yeah, sir. Good morning and thanks for the opportunity and for good numbers that you've given. So I just wanted to know, you mentioned in your Concall the opportunity being presented by the budget. If you can address what's the opportunity size for us and how many next year it will be much better for us. Since the capex of the government already around the capex.
Yeah, thank you. So these are very interesting and exciting times for us, especially this post-budget. we did an in-depth analysis of the opportunities for us, and we found that there is an allocation of around 5 lakh crores for few major ministries which are of interest to us. Out of that, about 2 lakh crores is for the Ministry of Roads and Highways, which includes, now you must have heard, the new ropeway plan, which is under the Ministry of Roads. So we do a lot of work in ropeways, have been doing, so I see this as another big opportunity. About 1.5 lakh crores is in the railway segment, which is our traditional line of business in any case. And interestingly, there's about 85,000 crores in the Jal Shakti Ministry and about 80,000 crores in the Ministry of Housing and Urban Affairs. Now, both these sectors, we've been doing a lot of work, and we are aggressively consolidating these verticals, whether it is smart city plans, mobility plans, the traffic studies. So recently we got the order for the Chandigarh Tri-City for the smart city plan for Chandigarh. Then Jal Shakti, we are doing a lot of work in water segment, renewables, water recycling. So I see a lot of opportunities in the coming years, especially in these new age verticals, besides our traditional lines of business.
And so this is mainly across consultancy that you see, or it's across your, including turnkey also?
Both. So you've seen in our past trend in the years, we have a healthy mix of turnkey and consultancy, and we will continue on a case-to-case basis to target both consultancy and turnkey in all these sectors.
Okay, sir. Thanks for the opportunity. Thank you, and all the best, sir.
Thank you.
Thank you. The next question is from the line of Harshit Kapadia from Elara Capital. Please go ahead.
Yeah, thanks again, sir. So just on the follow-up question on the opportunity, any opportunity in the large size segment that we have been talking about on the DFC, on the high-speed rail, semi-high-speed trains, and the two suburban railway, upgradation that have been planned? So any color on that would be really helpful.
So in fact, we are already doing a lot of work with DFC. We have a running contract with DFC. We are doing a lot of work with them. We got last year, if you must be following us, you must be aware, we got an order from Haryana Orbital. So we're doing that. And in that, with more and more in this model being encouraged by the government in various states, these orbital railways, light railways, suburban railways, including high speed and semi-high speed, we've got the consultancy projects for that. So we are doing a lot of work in that. In fact, recently we got the order for the transaction advisory for the Bangalore Suburban Railway project also. So we see a lot of opportunities in the coming months and years in these areas as more and more states delve into these areas of orbital railways or short lead suburban railways.
And how's the competition landscape in the consultancy portion of the business? Has it increased or has it remained stagnant or?
Well, that's a very general question. Competition is always there, and we are always ready for competition with our past and our domain strength and our policy of being partnering wherever it is required on a case-to-case basis on complementing our bench strength and our domain strength for aggressively bidding for new areas also. We have been working. You must be following us in the last month or so. We've had a number of partnerships and MOUs across various sectors. So with this, I think I take this competition as a good, healthy sign for us to improve even further.
Thank you. The next question is from the line of Sanjay Doshi from Nippon India. Please go ahead.
Good morning, sir, and thanks for the opportunity. I have more focus on the overseas business, sir. One is your export business has been quite volatile, as you mentioned. It's a good long lead time project business. But do you see, the kind of effort you have made in coming out with standardized and more customized products for different markets and entering new markets? So can this become a very sustainable annual 500, 700 kind of revenue on a 3-4 year basis?
Yes, in fact, as I mentioned, as in the last few months, the international, travels and the interaction is opening up more. We have got lot of interest from various countries, and they are, in fact, the customization model of ours, like we did for Mozambique, it's got a lot of response. Even during the IRE held recently, we got a lot of positive response from various overseas clients. So, as you correctly mentioned, in the export segment revenue, there is a certain lead time. So, in some quarters, it may see dips in terms of revenue realization, and some quarters or maybe half yearly, it may see a upswing when the revenue actually gets realized after shipment. But on a sustained basis, yes, as seen over a longer period of time, I see the export business to grow in a substantial way, more so with the success of this customized gauge which we've done and commissioned, and it's being running very well in Mozambique.
Thank you. The next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Hello.
Viraj
Hello.
Mithani.
Yeah, am I audible?
Yes, go ahead. We can hear you.
Yes, sir. Congratulations first on the good set of numbers. I have one question, sir. Now, we are broadly on, if you talk about 20 levels, we are at 2,500 crore of revenue. And if I had to ask you, in next, say, 3-4 years, what growth rate we can foresee? Like, since you're saying there's so much of the opportunities, just a general ballpark figure would be okay. I don't want exact figures. So, your sense on the growth rate in next coming 3 to 5 years,
So as I said that this year we will reach 1920, and then 22-23, as I mentioned, there would be maybe a certain dip on a quarter for some export revenue which will make up with the consultancy and turnkey. But on a general long-term, we see a very healthy growth. So I don't want to speculate, but whatever you feel is the healthy rate of growth, we will be, I can only say, with this aggressive diversification in new age areas that we are doing, and we are getting a lot of positive response in areas of sustainability, environment, recyclables, renewable energy, smart city planning. You can see in the coming quarters, you will see definitely a more bigger growth trajectory, but it will not be fair to me to restrict to either a very high number or a very low number for a 3 to 5 years, because that will be speculative. Let our work speak for itself in the coming months, and you'll see the more and more new area orders coming up.
So it'd be fair to assume double-digit growth rate on top and bottom line?
As I said, I won't like to speculate. These are just speculation numbers.
Okay, sir. And my one more question. What is our cash in the balance sheet? Our own cash would be, sir?
So I was asking a second question, but just to, in case, our cash on hand as of Q3 ending is 800 crores.
800 crores. Okay. Thank you, sir. Thank you so much.
Thank you. The next question is from the line of Umang Shah from Sharad Capital. Please go ahead.
Hi, sir. Thank you for the opportunity again. Sir, previously we've had some problems with respect to collecting receivables from Mozambique. So when we are exporting right now, how do we make sure that we don't have any receivables issues?
I think the issue has been sorted out quite well, and now both our export realization, and both from Mozambique and Sri Lanka, is well on track. All those nitty-gritties have been sorted out, and I don't foresee any major hold-up in the trade receivables from our export front.
And sir, how much credit period do we give them?
Pardon me?
How much credit period do we give to these buyers?
That varies from contract to contract. So I wouldn't like to make a generalized statement. It varies from order to order.
Okay. Thank you so much.
Thank you.
Thank you. The next question is from the line of Lokesh Manik from Valum Capital. Please go ahead.
Yes, thank you for the opportunity again, sir. Just one question. The recent MOUs that you have done, what is the revenue opportunity that you see from these contracts or these MOUs? If you can just share some guidance.
No, so each of the MOUs which we've done recently have been very well thought of and fit into our master plan and our strategy for long-term growth, and our basic strategy of future ready and trying to do not just more of the same, but much more of the new. So each of these MOUs, whether it is with BML for metros, where we are doing, we're going to aggressively bid for a number of domestic and international projects, whether it is with SNEC for consultancy, whether it's with IIT Roorkee, CSIR or AITD, all of these are going to mature into revenues definitely in the coming months. Because each one of them, whether they have a certain sector in which they operate on, they will complement our strength, whether it is in the consultancy, whether it is in the export, whether it is in the turnkey, and each one of our partnerships and MOUs have been strategically thought of in the overall game plan forward.
Right. And these will be long-term in nature, sir?
Obviously, MOUs and agreements are based on a long-term horizon. However, they vary. The time period varies from case to case for each MOU, depending on the comfort level of both the partners.
Okay. So these are not project-specific MOUs?
Sorry?
These are not project-specific MOUs. These are long-term in nature.
MOUs are memorandums of understanding to be jointly complementing each other's strengths and taking part in opportunities both domestic and international.
Understood. Thank you so much, sir.
Thank you. As there are no further questions, I now hand the conference over to the management for closing comments.
Each of the participants for their questions, and the entire management is here with me and the entire board. We again assure you that the trend, as you've seen in Q3, we are committed to maintain this in the coming quarter, and I'm sure that with the opening up of the economy and the restrictions, we are definitely going to capitalize on the opportunities which come up, especially including the opportunities which, as I said, have been thrown up in the current budget also. Thank you.
Thank you all for being a part of this conference call. If you need any further information or clarification, please send an email to gaurav.g@conceptpr.com. I repeat, the email ID is gaurav.gr.com. Ladies and gentlemen, this concludes your conference call for today. Thank you for using Chorus Call conferencing service. You may disconnect your lines now. Thank you and have a pleasant day.